This is the EconBros podcast, and my name is Gokul, and my co-host here is
Manish.
So we have a special guest here, and his name is Jason. So do you mind introducing yourself to the audience?
Hi. Yeah, great to be on here. Jason Kraus. I'm the founder and CEO of a company called Prepare for VC, where we help startups through the fundraising process. And it's great to connect with both of you, and yeah, excited to be on the show.
Yeah. So glad you brought that up. Like, the first question is what led you to do this? Like, do what you're gonna do?
Sure. Yeah, I've been on both sides so far, the startup side and the investor side. And now with my current company, looking to help startups understand what investors are looking for and prepare for that process. So, I have had experience working for different funds and what's called angel groups, which are groups of individual investors coming together as well. So both angel groups and venture capital funds, kind of figuring out what investors are looking for when they look at different startup companies, analyzing the pitches that come through, and helping figure out, and trying to predict what's going to be a good and a successful startup company down the road. So yeah, I've been taking that experience and going to the founders and helping them with everything from presentations to investor strategy and growth strategy to put them in a better position to both raise capital and then also grow their company.
That's great. So what's your background, like your college? How did you get started with the beginning?
Sure. Yeah, actually, I went to Colgate University for undergrad. Actually, started in the entrepreneurial space there too. I was working on developing an app senior year of college called Night Owl that would help you figure out what was going on around campus and what events or parties or things were happening that you could go out to and kind of have everything in one space. I didn't know. It was kind of just jumping right into the startup world, so learned a lot from it. Company itself didn't end up being successful, but it got me really excited about about the whole process. And with what I know now, it was probably what we consider an MVP, or the first more of a prototype version that we created. And something you can show, get people excited about it, and then use to build more of a final version from there. But yeah, that got me interested in the space. Went straight from college to grad school at Babson College, which has a big entrepreneurship program. And yeah, I got also in undergrad, I was an econ and math major. I'd done some internships in finance and wealth management. So was looking to go the finance route, but also wanted to tie in the entrepreneurial side. That's when I got involved. I got an internship with an angel group called Boston Harbor Angels that hosted their meetings at Babson. And, really got to see start every month. There'd be new startups pitching and presenting, everything from tech companies to medical devices and life science companies. And, getting to hear about companies before anybody else really heard about them was pretty cool and exciting. And, also getting to see how investors thought about different deals and what they liked and didn't like about different companies. Really got me interested in the space.
That's pretty interesting. Great journey you had there. So what was did you have what was you had to overcome, I guess, in the beginning? Obviously people in the start of a journey, there's gonna be a lot of steps to go up. And so what did you have to do in that, or how did you do it?
Yeah, sure. At the beginning, it's always it's trying, some things you learn from other people, getting out, listening podcasts like these, having conversations, meeting people on either LinkedIn or at different events. So I think you just kind of have to also try and figure out and see what works and what doesn't work yourself too. But yeah, I think one of the things that really helped was, I put a lot of time and effort into networking. So, met basically like tried, reached out to as many people in the venture capital space that I could that either went to my college or grad school, and, had a lot of conversations just wanting to learn more about the industry, and people were pretty open to chatting and connecting and, talking about their story. So, yeah, I think what you guys are doing, like, it's definitely beneficial, and any of the listeners too. If you go and reach out to people and you're honest, like you just want to, have a conversation, learn from their experiences. Yeah, a lot of people are going to be pretty open to chat, and, yeah, you can learn from them.
Yeah, definitely. So I had a question about your internships. I know in college and in grad school you did some internships. So I know you were talking more about your wealth management internship, and you did a real estate internship, and then you did one in UBS, which is a big company. So could you talk about those internships and what made you really want to go into that field? Because real estate, wealth management, finance, all three different things. So obviously you did a lot. So what really made you want to go into the entrepreneur side?
Yeah, it's a good question. I think so. Yeah, the overlap, I guess, would be more of the analysis and kind of trying to figure out what's a good investment is the piece I really liked. Whether it's in the wealth management one, was more stocks and bonds, kind of analyzing public markets versus real estate. It's all private deals. It's reviewing different reports and different research reports about the local markets. And what I'm doing now in the venture capital space is all private companies that are, they could be a few years old company. It could be in general a company that's worth, if you look at a stock market deal, those are typically several $100 million to $1 billion plus businesses. Versus, the startup companies we're looking at are $3 million, $5 million ventures that are hoping to get to that space eventually. So yeah, it's a lot more it's kind of, a lot more, getting to know the founders, a lot of emphasis on the team, and it's hard to get to know the team, or, you're just kind of reading more reports and things in the public market. But one of the really cool things about the startup side is you actually get to meet the people that are founding these companies and get to learn more about their experiences too, and use that as part of your decision of do you have the same vision that they have for the company, and is that something investors are also going to be excited about, and I get to be part of that journey.
So, what would you say you're in the startup field, and we know you have a lot of experience in it. So, what would you say the misconceptions in your field is? Because I know a lot of people might say without even being in the field, they don't know what's gonna actually be in the reality once they stepped in. So, what do you think?
Yeah, I think there's a lot of times we're kind of hearing about the outlier cases. So, it seems like it's the companies that make it big and have big news stories. They're getting huge investments, and it seems like they're kind of overnight successes. And if you go back to what actually happened, the founders all struggled at the beginning trying to figure out what their customers were looking for. And I went to a conference in California probably like 4 or 5 years ago at the Startup Grind conference, and one of the founders of Airbnb was talking there, and he was like talking about how it seems so easy in the news, but like they actually weren't getting much traction at all at the beginning. And what really helped them was like they went out and they went to all the apartment owners that were listing in New York that were listing properties on their site for short-term rentals, and they took the photographs for them because the photographs were terrible on the website at the time. And then they started chatting with everybody about like what features were really hard to use and what was holding them back from creating more listings on the site. And then just from talking to the customers, they were able to make it into a successful business. But they struggled at the beginning as well, like just like a lot of other startup companies, kind of trying to figure things out early on.
So I wanted to ask,
Yeah,
you were talking about like the struggle with the others. Do you have any like personal stories that you had to overcome, maybe in your startups or the companies you invested in? Do you have any?
Sure. Yeah. So there's, I co-founded another company before Prepare for VC that was in the financial technology company. We're actually focused on, or we started in the crowdfunding space and then kind of shifted to the cryptocurrency market. And one of the things that we were looking at all the deals and new tokens that were being issued, and trying to help like investors or people that were looking to buy these cryptocurrencies analyze different deals that were across different exchanges and platforms. And one of the things one of the challenges we ran into was the regulations in Massachusetts changed at the time, and it prohibited some of the companies from actually issuing the type of, they were called ICO tokens, and they had to completely change like the way they were issuing each of these cryptocurrencies. So in that business, it made us like have to kind of redo or even eventually like shut down because the business model really didn't work anymore there. But in others, there's businesses I've either got consulted for or invested in that have like pivoted and changed their business model along the way. Some have been, I think there's two sides. There's either like you have the right product and maybe you thought you were selling it to one group or one person, one type of person, but it's actually a better fit for a different audience, and kind of changing the way you market the company. And then, it could also be there's a different feature people care about than you thought originally, and, having to shift and change to, redoing some of the technology as well.
Yeah. So, now let's go into the strategies of like creating a startup. Like I know creating a startup, it's well and easy to say, but it's actually a lot going on behind. So like obviously funding is the main thing for startups. So like I want to know like example in your situation, how was the funding going on? Such as like in order to start a startup, you need to have some money to start. So can you explain us like in order starting it, what are the pros and cons?
Yeah, sure. Actually, so it depends on the business. Sometimes, like some of the ones I've been involved in starting, we've just kind of created things from scratch without really needing much financing. So for example, the last one, the like crowdfunding and cryptocurrency one, we used a website, like a low code website called Bubble, where you can create, you can create a platform without really needing to know how to code. You have to figure out, like, it took some time figuring out the workflow side of it, meaning, if you put a button on, you can drag and drop a button on the screen, and then you have to tell it like what this actually connects to and what it does, but you don't need to know a coding language to do that. So tools, there's a lot of tools, and especially today, there's more kind of AI driven tools and technology now too, that can make like the process of starting a lot easier than kind of being really expensive technologies you need to build to get off the ground. And then on my like consulting company, that was the only, I really just started with like going on some freelancing websites and looking for initial clients, trying to connect with as many people on LinkedIn, and putting a quick website together that just showed like some of the services I wanted to offer. And once I started getting more clients, then I just put that back into the company to like start, being able to grow the business and start more marketing and things from there. But it didn't cost much to get off the ground. It's just going from like that. There's a big hurdle for a lot of startups, kind of going from like those initial customers to growing and expanding your business to be more of a like long-term sustainable company.
So would you say like startups is right now in this time period, like would you say it's getting easier or harder, like in this economic status?
Great question.
I'd say it's easier to start but harder to grow your business.
So is it more like AI? Is that the reason, or like a bunch of technology tools to let you start?
Yeah, I mean, there's a lot of like prototyping tools. It's easier to design. Even show people what your platform's going to look like and start getting some interest and excitement. There's there's other ways. And even just like there's you can start gaining interest on social media channels. You can build up a following even before you really launch, or you can start building wait lists on, your website or on your Instagram or TikTok pages before, you even launch a platform, which, wasn't always possible in the past. And so the like community side has helped. There's a lot more also like events and startup communities, especially around the Boston area. And the piece that is a little bit harder is now, there's it seems like there's more startups than ever before. So, when you're going out and looking for capital or investors, there's plenty of investors out there, but you're also competing against more companies than you would have been competing against in the past.
I know you have like a lot of like financial startups, right? So in the how are those, like, are they successful? Are they like working good? Like, how do you start with that?
Sure. So in terms of the financial technology industries, or okay, sure, I think there's a lot of interest, like different areas in the there's a lot of exciting ventures. They kind of take, and it's hard to group startups into one category too, because there's also I'd say like some companies need to go different pathways. There's some businesses that, for example, need to let's take it's I'm gonna jump away from the finance side for a second, but if you take Uber, a platform like Uber, for example, they need to capture a whole local market and expand to another local market. So they need to put a lot of money into the business and into capturing different markets really quickly versus, a platform that is selling to, it's a business to business platform and it's selling to another company that might be able to get one large contract and then kind of keep growing into another large contract kind of one by one, and they're going to have a completely different growth model and might need less capital or more capital than a different business. And maybe some pathways are going to lead you to becoming a publicly traded stock eventually, and others are going to say I want to be bought by a big company that can acquire my business and take our business over and run this market.
So
yeah.
Manish, you have a question?
Yeah, so I was just gonna go on to going towards like the future trends, because like I know like definitely future is definitely a big deal right now. So what do you think the startup world is gonna look like in the future? So like what I'm trying to say is like in the future, do you think AI is gonna start making like startups and stuff? People are just gonna use AI to make startups, or like what's your thought on that?
Yeah, I mean that's an interesting question there. I think it's going to be involved in some capacity in most startup companies. I don't think every company is going to need to be an AI company, but it'll have some sort of technology built into it. So, for example, there's a platform we use for one of our startup communities, Boston New Technology, called Ecos, and it's a community platform, so you can host like virtual events and you can share local events on there and connect with other people. But the AI component they have is figuring out who you match with on the platform. So they use it just for one specific piece and function, where like it's a community platform at its core, but it has AI built into it. And then there's other ones where like there's on the other side, there's a company called OmniLife that I've worked with that is in the digital health space, and their core platform is making communication easier between hospitals and transplant centers, and helping connect the right, say there's a kidney donation that comes in, helping automate the process of finding the right doctors and patients to match it with. So they do use AI in that, but that wasn't part of the initial sale. It was really like, we're gonna be more of a workflow tool and help automate this process, and then they ended up using AI to solve that. So like, yeah, so a lot of great companies kind of integrating and putting AI at their core, but then there's also some that just find like one particular feature that they're gonna build in, and that'll probably be more and more popular as well.
I kind of want to like the advice. I want to ask like some advice for people who are interested in startups. Would you say like for a startup you would either prioritize profits early on or just straight rapid growth? Would you do long-term profits or just rapid growth from the beginning? Like, what's the strategy there you could use, or any others you have in mind too?
Sure. Yeah, I think right now, one of the shifts in like the current financial market has been more of a shift to focusing on profitability versus what was considered like kind of growth at all costs. So it depends on the market a little bit. If it's The reason, so I'd say the reason it shifted a little bit the last year, like, is because it got a little bit harder to fundraise, and investors now have been looking, it's bounced back, but investors now have been looking at companies where if the next round happens, like if it happens 12 months or a year and a half from now, they know it'll be a point where the company can continue rapid growth. But if they also want to see if for some reason they're not able to fundraise in the next year and a half and it takes them 2 years to get to their next fundraise, they're still going to have enough profits that they can throw back into the business to keep growing. So that's become more and more like something investors have been looking for. And then kind of the only thing on the other side of where the rapid growth is really important is kind of the way founder or the equity, so the ownership the founders have and the ownership the investors have gets the most value is at what's called an exit event. So that means if your company goes public and now all the stock is tradable and you can cash out some of your shares, growing, you have to grow the value of the business really significantly to get to that point. Or if you're getting acquired by another business, somebody is saying, I'm going to buy, maybe you've sold shares to your investors at $1 a share, and now a corporation wants to buy all the shares in your company for $20 a share, and everybody made 20 times what they put into the company. So that's where kind of rapid growth to a certain point can be good, but it also has to be a little bit more sustainable, and profits are important as well.
Yeah. So I remember like last topic when we were talking, you brought up Boston New Technology, and you brought up like that. So I want to go into like the volunteering and the events you go to. So I know you attend a lot of events in Boston and do a lot of volunteering. So like it'd be really good if you explained a lot about Boston New Technology and like Santander X and etc. of whatever volunteering you've done. And I know you like helping people. So
yeah, no, I appreciate the question. So we have an event group called Boston New Technology. I'd always gone out as a member the last probably 6 or 7 years, and it was great. Really helped me kind of grow my prepare for VC business and some of the other ventures I've been involved in too. And then the last year and a half, I got involved as an organizer of the group, where we came in, it was a super active group before COVID, and it has 28,000 members in the Boston and New England area. And then we came in really like October of, I guess it's been almost 2 years now. So October of 2021 to kind of kick back up, get a weekly technology newsletter going, and then slowly bring back the in-person events and start with some virtual events as well. And now we're back up to having like usually about 2 in-person events and several virtual events every month. And it's a mix of like startup pitch events, different panels with speakers, and getting to hear from startup experts, investors, anybody that like wants to give back and share their story to the local startup community. And different networking events too, to go out and meet other entrepreneurs and see what other people are working on and help each other out. So I really enjoy kind of being a part of that, and it's been a great experience.
I I can see
Yeah.
it's been a great experience. So for like,
Yeah.
you brought up like venture capital, right? So I kind of wanted to, maybe for someone who doesn't know what that is, which is what is the, you know, the basic or vague just definition of what venture capital is.
Oh, sure. So yeah, it's investing into businesses that are high growth companies, or have the potential to become high growth companies. And so what happens in a venture capital investment is you're putting a certain value on the business. So you're saying, um, I'm going to give, or a VC fund is going to give $1 million for 25% of the company, and now the company is worth $4 million because the 1 million was 25% of it. So basically, their goal as a VC investor is for that the value of the business and the stock price, or the shares that they bought in the company, to continue and to grow every round, and also towards that exit event I mentioned earlier. So if you're coming in, investors go in at different stages of the company too. Some like to go in when it's really early and there's little to no revenue. Other investors like to see more revenue already established, and maybe they'll only go into companies that have $1 million or more in revenue already. The earlier you go in, the riskier it is, but the higher potential for growth. And then the later you go in, there's not as much growth later on, but it's de-risked and it's more likely that there's going to be some return from the investment. And in general, the majority of startups do fail and don't make it in the long term. So what investors are looking for is they like to build a portfolio of companies where if two are super successful, that's going to make the fund successful. Assuming like a handful are moderately successful and some of the other ventures don't make it and they fail, like those ones that did really well are going to make up for the ones that don't make it in the long run.
So
Yeah,
there's
definitely.
a
So
pitch, like I think you brought it up that before. Like for example, you might be even in the investor side of it. So what advice would you give to someone who wants to pitch to an investor as a startup? Yeah.
Sure. Yeah. So part of it, on the financial side, is they have to see the potential for this to grow to the size of business that is going to be worth their investment. So, if you're raising $1 million, for example, and your business is going to be worth, call it $1 million, then, it's not going to be worth it to the investor because they're not going to see that growth in what they put into the company. So yeah, investor, they want to see the financial returns. They also want to see the impact that you're making. Even if it's not like it's a pure financial investment for them, they're still seeing there's always some problem that every startup is solving. So they're looking at like how many people, if your company didn't exist, what does the world look like, and what does the world look like with your company, and are people going to be excited to either buy this or use this, or put it into their business if it's a business to business company. So like even if the investor isn't part of the audience that's buying the service, they want to be able to see why everybody else would buy it and get excited about that story. And then the team part of it is really important too. So like surrounding yourself with other experts in the space, and getting involved with different, it can even be like partner organizations you team up with, or people you bring on as advisors that know all the right people to connect your company with and are going to help your business grow in the long term.
yeah, definitely. So I wanted to also ask about the criteria. So I know you've invested in 20 startups through EQX Fund, and I wanted to ask, like, how do you select, like, which startups you're gonna choose, and like the strategy behind it?
Yeah, a lot of it is the people involved. So well, they're all experts in their industry and field. A lot of them have done multiple startups too, where whether they've had a first successful venture or the first one was more of a learning experience. Like, it's always easier the second or third time around. But yeah, some of them have had really successful past companies that they've started, and now they're, even like taking some team members they're already really comfortable working with and starting a new company with them. So that piece is really important, as well as kind of the early proof of the company, meaning, have they gone out and either gotten customers to sign up early on or talked to customers that have said, if you do these 3 or 4 steps, I'm going to buy your product, or, sign a deal with your company. So it's kind of talking about this, getting comfortable with the story they're presenting that says, our business is going to grow. What we want to see, and what all investors really want to see, is a startup that says, we're going to do this no matter what, and we're going to be successful, but we can be successful quicker with an investment. And that's why we're coming to investors to help speed things up and make this a even bigger company. And becomes more of an opportunity to get involved at that point.
I kind of wanted to like switch gears a bit and talk about, I think you brought it up once, cryptocurrency. You brought it up once in your personal. What do you think of digital currency? Like, what do you think of, just your thoughts on it?
Yeah, in terms of, there's a few different uses for it. There's, using it as a currency. There's using it as something to invest in. And then there's more what are called utility tokens, which are used on like different platforms. So I think they all have uses. There's benefits. So like as an investment, for example, it's it's gone up over a longer term period. It still has fluctuations in the short term. So it's like the difference with the cryptocurrency market, and I'd say that's probably more similar to like a stock market investment, where it's public market. Anything can happen one day versus the next, versus kind of the stock, or the startup market or the venture capital market I was describing. You set a price, and then like each round of investment, and then it could be another year and a half or 2 years until you have a different price for your company, based on the next round of investment. So it's not that day-to-day fluctuation. But yeah, I think there's a lot of good opportunities in the cryptocurrency space. If some are kind of more stable and the most popular cryptocurrencies right now, others might be earlier on. And if people start building on top of their platforms, or using them more, or figuring out different features they have, they might become one of the popular companies, and they have more upside there too. I think it's interesting as a currency. This is like an economics podcast too. So as a currency, since there's a limited amount of them, it basically incentivizes. it incentivizes people to like either save or invest in them more than spending them. So, you know, if you think like, hey, you know, there's a limited amount and people are going to want more of them, then the price will be worth more in the future. So I shouldn't really spend my cryptocurrency. I should either save or invest in it. But yeah, it's kind of different than the cash model where we're always saying printing new money in the US.
So would you say it's like a net positive, maybe currency wise?
There's been talk recently about creating a Fed coin or like a digital currency that's backed by the US government too. Mm-hmm. And I don't know, I've kind of heard both sides on. Some people really like that and think, you know, there's a lot more, you know, a lot more tracking capabilities you can do, even just, you know, a lot more digital platforms that can be enabled by some kind of virtual currency and anti-theft or other applications there. But then there's the other kind of more argument of, well, if that's what everybody is using, then it's not really going to have any difference than just a dollar, and we're just kind of changing the platform. So I think like it's hard to say what's better for everybody, but I think there's benefits of, you know, having like different types of assets and different types of, you know, platforms.
Mm-hmm. Yeah, definitely. So what do you see in like coming back to like crypto and like Bitcoin and stuff? So like, how is the future? Like, what do you think the future is going to look like?
Yeah. So the other challenge in predicting it, and is like Bitcoin it's the most popular one, but it's not necessarily the best platform. Like there's platforms or there's cryptocurrencies that are quicker if you're using it as a currency, and you can do a lot more transactions per second, which would be important if you're, you know, even like a Amazon type platform or any e-commerce site that needs to do a lot of volume. And there's ones that, you know, you can build other applications on Bitcoin, but Ethereum, you're able to do it even more. But then some of the fees are a little bit higher on there. So there's other kind of platforms you can build different applications on top of that use cryptocurrency. So, you know, I think in the short term, Bitcoin will still be like the leading currency, but not sure, you know, who will be the leading currency like 5 or 10 years from now.
Now I kind of want to talk about your book. I know you published one, and do you mind so why did you want to publish a book, I guess? First question.
Yeah. So, I mean, I always kind of wanted to write a book even when I was a kid, but I always thought you had to like either be an author as your job, or, you know, that was like what you had to do was be somebody that writes books. But yeah, I actually met a speaker at a conference I went to called the Next Gen Summit in New York, and he was a Georgetown professor and had this group called the Creator Institute, and their whole model is that, you know, creating a book it's something you can do alongside whatever else you're doing. You know, he had some students that were in school that were writing books. He had people that were working full-time jobs or ran their own companies that were writing books, and basically had this like course or program that would take you through all the steps of like putting all kind of going from ideas to your first, you know, few chapters, and organizing everything with editors. And part of the reason for it is when you create something, it helps you stand out from everybody else in the field. So a lot of people, are putting out whatever, putting out content on LinkedIn or blogs, but not a lot of people are publishing books, and people know it's not an easy process. So kind of getting something out there that helps tell a story of both sides. It took some of the experiences I've had in my journey, and then it also took other startups I've worked with or startup stories I interviewed for the book. And the real goal of Venture Forward was to say not every startup has the same journey, and what you should be doing as a founder is just looking to the stories from other founders, but figuring out what applies to you. So, in a chapter, for example, there might be like 3 completely different scenarios that are all at the same stage, and founders approached the same problem in different ways. And maybe one of those resonates the most to the reader and can help them figure out what they should do next.
Yeah, definitely. So, for Venture Forward, what are the key takeaways for entrepreneurs or investors if they read this book?
Yeah. That's one of them. It goes through each different phase. So like it's starting at how you come up with the initial idea, how you go through and like start talking to customers. And one of the themes is really getting out there as early as possible and getting feedback before you build something. So making sure like you don't build things people don't want, and you're getting feedback to kind of adjust the things that people do want. It talks about different fundraising scenarios and how people went out and pitched their business, and tries to give a little bit of insights into each of the stages of the startup journey.
So actually, that was all the like questions we had for you. But I also wanted to ask like one quick last question, like what advice you would give to high schoolers, anyone trying to get into the field you work in?
Yeah, I'd say follow your lead. Start talking to people, whether you do more one-on-one or you formalize it into a podcast, or can be anything. It can be going live on Instagram or TikTok with somebody. It can be recording YouTube or podcast videos. Kind of the more you can create your own content. Like this is also be great on on any future resumes too, and saying, hey, look what I created over when I was in high school, and now I'm a college senior, and I've done I've interviewed, if you keep this going, you can say you've interviewed like several hundred guests over and talk about all the amazing things you've learned over that period. So yeah, definitely say like follow your lead there. And the other piece is just reaching out. If you don't have a LinkedIn yet, like it's a great channel to set up and start connecting with people. And one thing that works really well is you can add, like, if you're reaching out to somebody you don't know yet or you want to connect with, you can add like a short personal message in the invite, and then start a conversation with them to and just be open that like you want to learn from, you saw their background and you're interested in the space and you want to learn from them. And most people are pretty open to having those conversations.
Yeah, so Manish, you have any last second thoughts?
No, I'm really glad you came on our podcast. Definitely, you have a lot of info. We'd love to have you again. And I would definitely read this book. I'm really interested, very intrigued. So I'm very curious about it.
Yeah, so where would you get this book? Just like for the audience. Yeah.
Sure.
Yeah, exactly.
Appreciate that. Yeah, it's on Amazon and it's called Venture Forward Lessons from Leaders. So there's a physical copy, an ebook, and an audiobook.
Okay, well,
Yeah, definitely.
great. So thanks for joining our podcast. We would love you to,
Yeah,
join back any other time. So yeah, thank you.
Yeah, that'd be great. Appreciate you having me.